What is up, YouTube? Today, we're going to be going into how you can use IFVGs to help improve your trading for the better. Let's get into it. So, the very first thing that we have to ask ourselves is why should we use IFVGs? All right. So, the very first thing is that they can help you determine your daily bias. Okay. Secondly, they are a great way to help you place a trade entry. All right, but before we get into IFVGs, the first thing I want to go over is what is a FVG or fair value gap. So the simplest way to put this is a fair value gap is just a 3 candle sequence where the first and third candle wicks do not overlap. And what ends up happening is it creates a gap within the price. Okay. So what this shows us is a strong intention or buying or selling pressure on one side of the market. So in this example, this is our bullish example. This would show that buyers were heavily in control during this moment. So vice versa, going over to our bearish example, this would show that sellers were heavily in control during this moment. All right, now let's get into an inversion for value gap. So the way that we are supposed to use inversion fair value gaps is it shows us that the previous side of the market that was in control is now being disrespected. So here we have a bearish fair value gap, right? We have this 3 candles that are moving downward, okay? And what you can see is that buyers, they start to step in. And as you can see, price has a candle closure through that gap, okay? So if price was wanted to continue being bearish, what we'd want to see is price trade back into this gap and move out of it or not trade back into it at all. But when we see price come back to it and not only come back, but close through, this shows that the previous side of the market, in this case bearish, is no longer holding in the same direction. Now that is showing that the lack of sellers have died off. Okay. Going to our bullish example here, right? We have these 3 candles and price is moving upward. And then you see this massive candle come here and we close through that bullish for value gap, disrespecting the gap. This now shows that sellers are possibly in control. So I'm going to go over a few chart examples and how you can use these in real time. Let's get into it. All right, so getting into our first example, what do we see? We see that price is currently moving downward, okay? If we look on a higher time frame, such as the 1 hour, we can see that price is making lower highs and lower lows, okay? So came here, lower low, lower high, higher low, higher high, but then we broke that, right? So now we're still in a strong downtrend. So what am I looking for? I'm looking for shorts, all right? So we are not that far after our market open, and as you can see, we are selling off pretty strongly. So I'm trying to look to find some type of way to get into shorts. The very first thing I see here is that we have this 15-minute fair value gap that price is approaching. And this is a fair value gap that I would consider fairly high time frame, okay? And this can be a strong area that price could reject off of and we could take our trade idea out of, okay? So the very first thing that I'm looking for is just for price to have a retracement into this gap. So as you can see, this price taps in. So what I want to do to try to look for my trade entry is I want to drop to the 1 minute time frame so I can get a precise entry. So the only thing that I'm looking for is I'm just waiting for the first inversion fair value gap on this 1 minute time frame to take my entry. Okay, so I'm waiting, and boom. So as you can see here, this bearish candle that closed downward, this is the candle that ended up inversing this bullish fair value gap, showing that sellers um, are in control currently on the lower time frame, right? But what we also have supporting this is we have our bearish fair value gap that is being held on our higher time frame, which is supporting our overall direction. Okay, so what we look to do after seeing this first inversion fair value gap is we want to take some type of trade entry, or specifically a short, after seeing that IFVG. So coming here, I'm going in with a short, and I want to place my stop loss above the high, and then I want to target that most recent low here, okay, of that leg. So let's see what risk to reward we get here. And so we end up getting slightly over a 1 to 2 risk to reward. So let's see how this trade plays out. And boom, we end up smashing TP. All right, for our second example, we're going to go over how you can use this with a liquidity sweep. So as we can see here, right, price has moved lower and we have taken out this external low, okay? And one good thing that I see is that price failed to close below this low, and we had a strong rejection off of this. So this can make me convinced that price is going to want to move in the opposite direction, okay? Now, the only thing that I'm looking for after that liquidity sweep is some type of 1 minute inversion in the opposite direction. So the very first fair value gap that we see is right here. So the only thing that we're looking for is just a candle closure through it. And boom, we end up getting that candle closure. So I'm going to take my position. I'm going to place my stop loss below the low. And I'm going to target our most recent high. Okay. So for this example, it looks like our risk reward is not as good as the last one, but I will show you guys if this plays out correctly. So let's see how this ends up going. And boom, we end up hitting TP. All right. So as you can see, using fair value gaps or inverse fair value gaps, they can position you in a pretty good place. Mind you, you won't always have over a 1 to 2 risk reward, but they will always put you in a place where you can at least get a decent risk reward. And for some trades, get pretty crazy risk rewards. Okay. So it also depends on what time frame you use. Some people, they might feel comfortable with even dropping down to the 15-second time frame and taking inversion, which I don't necessarily recommend for people who are just starting out to use IFVGs, because the 15-second can be kind of noisy, and you need more confluences to go with that. Okay, so for our last example, I'm just going to be going over how you can use IFVGs to help determine your buys. Okay. So currently I'm on the 1 hour time frame, and what you can see in this current price leg is that price is moving up. Okay. But how can we determine that bullish is actually the way that we want to go? So looking at what price is currently doing, okay, is we are obviously making our higher highs and higher lows. But a way to confirm that is looking at the left side of the curve, right? And seeing what is happening with our fair value gaps. So if I mark out these fair value gaps here, what can you see is happening, right? Price is coming up to these fair value gaps and they are being closed through, and price is moving continuously higher. And what you can see here as well, we have our fair value gaps, right, that are holding and are pushing price higher. So what this shows us is that buyers are a lot more in control, especially on the higher time frame of the market, right? And sellers, they are completely out of control as all of these imbalances are being disrespected. Okay. So seeing this can give us a strong confluence that 9 times out of 10, going into the week, most of the days are going to be bullish. Okay. Thank you guys for watching to the end of the video. Please like and subscribe and put down in the comments if there are any other topics that you guys would want me to cover, and I will be very much happy to. All right. Well, y'all have a good one.